Welcome back to the program. We are taking a look at how this market finished with John Milroy from Ord Minnett and Martin Lekos from Macquarie Wealth Management. Quickly run you through some of the top and bottom performers at the end of the session today. We've talked about McGuire, Sky City Entertainment up by 3.3%, Retail Food Group putting on some gains there, as well as Beach Energy, which was up by about 2.5%. And yeah, interesting to see Bendigo and Adelaide Bank, one of those smaller lenders, in amongst those best performers, considering all of the turmoil we had in the space with the announcement of this Banking Royal Commission.
It's probably a function, Nadine, of the fact that they're probably seen to be separate from all of these misconduct issues, and they certainly haven't been in the frame to date. And also Bank of Queensland as well seem to have a good day too. And Bank of Queensland had their AGM today as well, and in relation to the Royal Commission, I think their feeling is just get it out there, increase competition in the space, so the same sort of lines coming out in that regard. Worst performers, there's always a flip side, especially on a down day. Aristocrat Leisure, just talked about this with the gentleman, down by 6%. We'll see how it recovers tomorrow, though, you know, as the market digests not only the purchase, but also the results. Illumina, Independence Group, it was a bit of a tough day in the metals and mining space with the material space down. As Martin pointed out earlier, sort of counterintuitive when we saw that steel prices rose, Medallion futures also bringing up iron ore and coal prices with it. Nonetheless, markets are always right. Independence Group down, Iris, and carsales.com. A little bit perhaps getting caught up in that tech sell-off, or is that just something completely different, you think, Martin?
Probably a bit different, but I think the guidance a week or 10 days ago was just slightly mixed, and maybe there's just not been ongoing some profit-taking on carsales.com. But it might also be the IT side. It's very possible, the tech side.
To be fair to the metal stocks, I mean, they've had a pretty good run to date, and of course the metals themselves have been performing really strongly indeed. You're still seeing some of those LME stockpiles fall as well, and that has been feeding to share prices until, of course, the price number of the base metals fell last night. And copper was coming under pressure today as well, so that always impacts. One thing that we are anxiously awaiting, oil markets, you could say, on tenterhooks ahead of this OPEC meeting in Vienna. It's set to take place in just a matter of hours. Members are set to debate the path for an extension of the group's supply cut agreement. Well, joining us live via Skype from Vienna is Peter McGuire, CEO of XM Australia. Peter, welcome to the program. Good to see you there. I mean, the market is expecting this extension of production cuts to cover all of 2018. Is there any room for surprise from your view?
Well, good morning, or I should say good afternoon, Nadine. Yes, I think I think the jury's out still, in the sense where a time period on this particular extension. There's many factors at play, but they could take it forward for another 9 months. But in a lot of ways, I think it's just be a 3-month extension with a further time horizon moving forward from June next year, because we have another meeting in May, and I feel as though that an extension of 3 months has been mooted around the fields over the last probably 12 or 14 hours. And it'll be interesting how the Russian oil minister plays today. They're keeping their cards close to their chest, but I feel as though that it's going to be a very interesting first couple of hours of the meeting.
Peter, it's Martin Lekos from Macquarie here. I'm interested in your view at the moment, because clearly we're seeing that a lot of the OPEC members are running very large budget deficits, and I suspect that some of the production cuts is wanting to get stability in that oil price, and if not, get it more elevated, and that seems to have worked. So what's changed in that respect if they're still looking to improve their own oil revenues to support their budget deficits?
Well, first off, Martin, you've also got to understand that we've got the Saudi Aramco IPO in 2018, so they're looking at inflated prices. The other side is have a look where the US shale's positioned and what they're prepared to do, because now with a $60 handle on crude, they're retrieving oil for the shale guys around that $40, $42 a barrel, so there's plenty of profit there for those particular players. The consideration is that we've still got 140 million barrels overhang. The extensions, what happens to that as far as getting some sort of equilibrium in the market. And I think over the next couple of months, it'll be interesting if that market stays at these sort of levels. That's the great debate. It's had a very strong run-up in the last matter of couple of months, and will it continue?
The other thing I wanted to touch base on with you, apart from the supply side, the demand side has still been pretty strong. And if you're expecting, as we are at Macquarie, that global growth is going to head towards 3% and there's good ongoing momentum, that demand side looks pretty good, doesn't it?
Well, it certainly does. I mean, there's no doubting that, and all across the world, you've got, solid growth coming out of the likes of the Indias and the Chinas and Asias, those big consumers that are probably a little bit further down the field versus the US, where they've got, 3 and 4 cars to a family. The outlier to that, of course, is the advent of electric vehicles probably over the next, 3 to 5 years, what impact that's going to have. But in the short term, certainly, there's plenty of demand picture that's very, very strong globally, and that's going to underpin and be, I think, a bit of a slap on the back for the OPEC producers. It's going to be very, very good news for them, and that's the story that they need to hear.
All right. Well, Peter, I'm sure you've got someplace to be very shortly, so you can be at the front foot of all of this. Thank you so much for joining us. We'll see you. Perhaps check in tomorrow to see how it all pans out. Appreciate it.
Thank you.
Also, big thanks to Martin Lekos from Macquarie Wealth Management, John Milroy from Ord Minnett. It was great to discuss everything of the day that was with you too. We'll take a short break. On the other side, the final count.
You're watching Sky News Business, Australia's business.